Hello and welcome back to Trade Talks. I'm Leanne Alfaro, producer and host here at Nasdaq. Joining me right now for a mid-blog market update is Brian Joyce, Managing Director of the Market Intelligence Desk. Thank you so much for joining us.
Thank you for having me. It's a pleasure to be here.
So, Brian, you focus on providing a technical take from Nasdaq's Market Intelligence Desk, also known as the MID. Could you start by telling us what is going on with the markets today?
Okay, so today we're seeing a risk-off move in the marketplace. Most of the major indices are down about 1.5% to 2% in the session, which on any given day is, seems like a dramatic move to the downside. In this environment, it's really not. So what we've previously seen coming into this week, the major equity indices were up 6 straight weeks off those December lows. So a phenomenal rebound, and really what many people are trying to decipher is whether or not this is simply a bear market rally, or is it the start of, say, the first leg of a new bull market? I'm kind of in that latter camp. I'm leaning towards that. We probably at this point won't be retesting those December lows. We could certainly see a larger pullback from what we've already had today. But my bias is that we're probably in the early stages of rebuilding towards a longer term trend higher to new highs, both here in the United States and a lot of the global indices.
Now, big news coming in today. Today's M&A announcement, largest bank deal in 10 years. So what's happening there?
Yeah, so today we had the announced merger between BB&T and SunTrust Bancorp. Both banks were approaching a regulatory threshold of about $250 billion in assets. And when I say approaching, expected to get to within about 3 to 4 years or so. So once they reached that level, the expectation was that the regulatory rules like the stress test and things of that nature would become more onerous. So at this point, they made a decision to combine the two banks. It's the largest bank deal in about 10 years since coming out of the financial crisis. And that will make the bank, which we don't know what the new name of the bank will be at this time, but the bank, if approved, is expected to be about $66 billion in a market cap with about approximately $450 billion in assets. So certainly a very large bank. Should bode well for the overall group. Coming out of the crisis, there was a very high amount of regulations that were very onerous on the banks. With this new administration, the Trump administration, that regulatory environment is easing. So we look right here at the KRE ETF, which trades about 10 million shares a day. So we know the institutions are certainly involved in this space through this vehicle. It is up about 25% off the lows from December, which is well above what we've seen in the S&P and the Dow and the Nasdaq indices, which are up about 20%. Now the KRE did initially decline before that about 31%, so certainly sold off a lot harder in the fourth quarter, rebounded a little bit stronger. It's now running into some technical resistance right here, as evidence to the highs of November and early December. This is also now touching its, if you can see the blue line here, its upper Bollinger Band, which is 2 standard deviations above the 20-day moving average. So usually when you're hitting that upper Bollinger Band, it's usually a sign of bullish activity, but also says that maybe the instrument, in this case the KRE, needs some time to consolidate. So that looks like what we're doing here. I do expect in time that this could resume the uptrend and maybe reach this 200-day moving average, which we've seen in the past it's been sensitive to. So this could be the next target once we kind of get through this period of backing and filling, which will more likely be determined as to what goes on in the broader marketplace. Earlier we were mentioning that there's weakness in the S&P 500 and the Nasdaq 100. We could see both of these major indices yesterday touched the 200-day moving average, which is what it's been proven to in the past to be sensitive to. It's a very common moving average where instruments, indices, etc., will often react to, in this case, to the downside. So we expect a little bit of a pullback on that initial test. But overall, you can see the broader trend is higher. This is a 20% move and a 25% move. I'm sorry, this is about a 17% move and a 20% move for the Nasdaq 100, 17% for the S&P 500. Getting back to the regional banks, they do look good in the near to the intermediate term. My bigger concern is this relative strength chart here of the KRE versus the S&P 500. This is a weekly chart. We can see spanning 16 to 2018 and 19. When it made its low in December, we did see a bullish divergence with momentum, which did not make a lower low. So price made a lower low, or the ratio in this case, but momentum did not. It's now rebounding higher. It's still not out of the woods yet, but want to see this ratio get back above the 40-week moving average before I would be more confident that the industry is going to be one of the outperformers in the next bull market. So still some work to do, very early in time, but fundamentally, I do like today's news, the acquisition news, the merger news, and I would expect that it should bode well for the group over the longer term.
Fantastic, short and sweet. Thank you so much, Brian. Really
Welcome.
appreciate the
Thanks for having
update.
me.
And we'll see you for the next mid-blog market update.
Great, thank you.
Nasdaq followers, stay tuned for more coverage right here from Trade Talks. That was